Hello, today is the 12th of April, Sunday, and we're in for another market preview, review, whatever you call it. And today, actually, I want to make it rather short because the main theme is not the market itself, but the importance of being able to identify the market regime. So, what's basically happening by itself, by market organics, so to speak, or in response to some news. And basically, there are two regimes out there. The first one is sideways, or chop, as some call it, and the second one is trending. I mentioned that topic briefly in a short video that I've deployed, I think, on Thursday. On Thursday. But it's a good topic to touch again and again and again, because, in my opinion, there are several tiers of players or participants in this market. The first ones, they don't know anything, and it's just a random activity. Sometimes supported by luck, sometimes punished immediately, but the result is always there. Such people leave the market quite soon, a few years at max, and they usually leave to never come back because it's horrible. They are damaged financially and psychologically, and it's a shame actually, because markets, when done right, can be a very significant contribution to your wealth, your independence, your freedom, your sense of self-actualization. And it's not good to abandon them, because it's worth it. It's worth it, especially in this day and age when conventional jobs tend to produce less and less opportunities to buy a house, become independent, have a nice retirement. So the markets are one of the few entrepreneurial opportunities that support the obtainment of that independence. So it's a shame to abandon them. The second tier of participants, they have some method, and we will not be touching purely fundamentally driven participants, because unfortunately most of them fall in the first category. They actually don't know what they're doing. They just produce some themes or narratives, as they are called right now, and they fool themselves long enough, for as long as their account remains stable, as long as they do not receive a margin call. But quite often they will, or at the very least, they put all of their resources, all of their liquidity in a basket of quote-unquote fundamentally sound stocks that never actually raise in price. They go down, and they end up as a long-term investor. You probably know such people. They're very present in the investment community. But there are some successful ones, obviously, but they are quite rare. The more advanced group are those who actually know what they're doing, and they have their setup. And by setup, I mean a mix of technical patterns, and sometimes they have fundamental additions to these patterns. Sometimes they don't. They are purely technical traders. But these people, they know what they're doing, more or less. They know, let's assume they know their allocation system, they know how to manage risk. And there are professional players in every possible variation of this palette of styles, so to speak. So there are purely technical futures players that manage institutional money. There are more fundamentally inclined players, and they reference price as well. But this group, which is very rare and quite advanced in comparison with the average level of a market participant, they face a very profound trouble, and they face changing market regimes. And most of them end up in a cycle of boom and bust. Maybe even the best of them end up as boom and busters. And that basically means that, let me show you some charts. Let's take Taiwan Semiconductor as an example here. So this market, maybe it's not the best example. Here is a good example. This period is a good example. Here it is sideways for quite a bit of time, consolidating since January 18 till September 19. The price went nowhere. And then it started to trend, backtracked, tested the upper boundary of this consolidation, and then off to the races. And those traders who were comfortable selling strength and buying weakness, if they were aware of what they were doing, they did quite well here. Because this is the type of market that is supportive to those who sell strength and buy weakness. Once again, if you know what you're doing, not just randomly pressing buy and sell buttons, hoping for the price to go your way, but actually having some system in place. But these guys who shorted here and here and here and here and made money ended up in a problematic spot here, where they were for some time back in power here, but once again, trouble, trending market. And obviously, these teams, they change. And the most critical skill is to be able to distinguish one market regime from another. And it actually has very wide philosophical implications that could be derived from this observation. Because you can approach this in different manners, and you can assess your efficiency at identifying the current market regime by the speed of adaptation. And that basically means if you're a trend follower and you buy breakouts, like for me it's the primary situation I seek to engage in, and for me this measurement means if I made money in a trending market, how much did I actually give back before noticing that breakouts aren't working anymore? Or even more important approach here could be, was I able to identify in advance the deterioration of the market regime that was supportive of breakouts in the first place? Was I able to foresee that? For me, as a techno fundamentalist, this is actually a valid question to ask myself, because I'm not a purely technical trader. I take fundamentals into account, and I sometimes rely on them quite a bit in my decisions. So, and in reverse, me personally, my goal is I have basically two systems now. The first one is bottle tested and it makes money and it's trend following. It's buying breakouts from lengthy consolidations. But at the same time, I want to be focused about a select number of markets and being able to switch from buying strength to selling strength, and from selling weakness in case of breakdowns from long consolidations, for example, like it happened here in Solana. Don't remember the exact date, but I think it happened somewhere here, because this was supposed to be the culmination of this short that I have covered too fast. And that's another technique I should work on: buying or selling enough and staying in a trade long enough when the directional movement is there. But I also want to be able to switch from expecting these big moves, from these long consolidations, to actually working inside them. Because once the psychological lows and psychologically important highs are established, they are reference points too, tradable reference points, but with a different approach. You shouldn't be expecting this to break down further immediately, like when it first established this low at the 21st of November, and then it approached it on the 1st of December, and even undercut it a bit on the 18th of December. It was obviously too short to go further down, but sometimes it does. So there is no perfect setup, no perfect approach in this market, obviously. But here, you could actually switch your approach and start buying weakness here, maybe, and selling strength. Few days of a trade, quite common pattern in futures market overall. So the core rule here is being able to identify the regime and adjust accordingly. You don't have to be this, I don't know, like a Swiss knife of trading that I'm personally aiming to be. If the regime is not in your favor, you just stop trading or you switch to another market. For example, Bitcoin isn't too good, and you look for trends at the moment. But maybe the gold is good. Or maybe it was quite good. Obviously here, perfect trendy trade. Or maybe the oil is good. Something is always moving out there, and something, not always, but most of the time, something will be quite close to what you desire to find in the market at the moment. And if we are to go beyond markets, as I've briefly mentioned before, this is exactly the principle that is absolutely necessary for living a decent life. You have to be able to understand what's really happening around, and what is your strategy, and what are the tactics that are derived from this strategy. What are your goals that dictate the strategy from which the tactics are derived from? And the markets here are actually a very good teacher, because what's happening now in our lives is, how do you say it best, like a change in public politics. Political communication is not a communication from a politician, not in all countries, I should make a remark, not in all countries, but in big, powerful countries, progressively, political communication is not just communication from a politician to their voters. It's a tool. And more often than not, it's a tool of distraction. Not information, but distraction. And that includes creating mutually excluding news day by day, sometimes few times a day. And this is a very easy way to paralysis and numbing of mind and disorientation and confusion. Maybe it is the goal, maybe it is not, maybe this change in political communication isn't even a specific toolkit that's being deployed. Maybe it's just the outcome of the state of political systems of today, of their current level, of their current stage in their life cycle, so to speak. Maybe. I'm not that, I don't have that much of insider data to state something. Maybe it's a mix of both, quite likely. But what markets actually teach us and what they show us most efficiently is that somewhere out there are always facts, something that can be separated from the noise of political communication, and something that is factual at the moment. Obviously, it has its limitations. Facts like observations, immediate observations, have their limitations because they usually don't show us, they usually show us past and the current moment. But they are not prognostications. It's up to us. We should make our own conclusions and assess trends or lack of trends. And in markets, it is price. But markets are very simple. Markets are just concentrated essence of human behavior, human as a species, of human collectives. That's what markets are, and that what the price represents here. Collective perception of something. In real life, it's way more complex, and there are way more indicators to look at, and it's a very large topic. We won't be touching that. But the moral of the story here is that you can always insulate yourself from noise, from intentional or unintentional noise, from attempts to distract, to confuse, to hijack your attention, and you can always concentrate on facts. And good observation coupled with clear goals and complemented by strategy to achieve these goals will give you tactics day in and day out. And that's the thing that markets actually teach us. And you can apply this in all areas of life. So that's maybe the most important takeaway of today's video. And with that being said, let's take a brief look at what's happening now. We had another piece of news in the morning regarding the war and the war of the States and Iran, and there is confusion again. Donald Trump doesn't want, or he states that he doesn't want Iranians to clear the Strait of Hormuz. So instead of that, the states themselves will block the passage of ships from this Strait of Hormuz. And later, a bit later, it became publicly known that the blockade isn't going to be in place immediately. It will be taking place tomorrow at 10 a.m. Eastern Time. So that, in turn, gave the market a welcome relief. So it isn't an immediate escalation, and it looks more like another step in this complicated game of diplomacy / military pressure that both sides are playing now. So, is it tradable? Yes, it is. If you identify the market regime correctly, with some basic price analysis, you can see that this is the level. It's about 73, maybe 73,500 per Bitcoin. And it's shortable. It's shortable on the daily, and it is shortable actually even on the hourly in this latter part of this price consolidation. Here is the blue punctured line as a reference. As you can see, it respects it quite a bit, this area of these two levels, this old one and this local one. So this is the real application of this principle in practice. What's happening in the news? Like, who knows? It's all noise. It's all noise, obviously. We have heard enough such news to understand that none of them really matter. They could be replaced by another piece of news in the next minute or so. Quite obviously, I can't check X / Twitter as I speak, but when I will finish recording this video, I'm pretty sure that something new there will be there. Maybe not from the administration of the States, maybe from the Iranian side, but it could be there, and it could push prices higher, or maybe make the market consume this supply, and we will end on a positive note here in the upper half of this daily range. It's possible, but the regime so far is unchanged. And what usually, another interesting point to make, what usually marks the upcoming change in regime? Volatility contractions, as described by the great Mark Minervini. Because that means if volatility contracts, if price volatility contracts and it stays and it achieves this fragile equilibrium for a few days, usually these days are inside days. Maybe I'll be able to show you something like this, maybe like this area here, end of December 25. Maybe this was probably my favorite setup in Bitcoin in the previous year, July 25. Very good consolidation. Or maybe this volatility contraction, like 1, 2, 3 waves of volatility contraction, and obviously the supply has been consumed by the buyers. There is a fragile equilibrium, and somebody just tilts the scales in favor of buyers, and here we go, we have a trend now. How long will it last? We don't know, but that's a question that your sizing and trade management systems are supposed to answer. So, could volatility contract here? It absolutely could. During the next week, if we will find out that the war is about to settle, and maybe the sides will find some common ground finally, it could contract somewhere here and it could break out, and we will finally have that relief rally, maybe to the declining 20-day moving average here. This is quite possible. But as I've said, observation is the first thing about observation. Observation is participation if it's done right, if it's done in a professional manner. And the second aspect of it is that observation could lead to actually placing positions here. But observation should tell you, should make you identify the market regime. And it's still chop. It's obviously still chop. This was shortable, and it could bring some decent numbers to your plate, like 3%. 3% quite easy, and 3% is good money in futures markets. It's good money for a scalp, or like few days, or maybe even few hours for a trade. So yeah, with Bitcoin, that's enough. Obviously, I will not be commenting on further fundamental things. As you can see, USDT. Oh, before that, I should mention, honorable mention of today is Tron. TRX. Obviously stands out. Good relative strength. And from a pure technical standpoint, suboptimal because 20-day moving average is still trending down. But you gotta take relative strength into account, and this bottom, I have an opportunity for a joke here, but I won't be making it. But it's it's double rounding bottom, so to speak, pattern. Another pattern that I have invented, and it could resolve itself to the upside too, but it could be volatile given the fact that 20-day moving average is trending down and the market is weak and choppy, obviously, as we have discussed. But you gotta keep such situations in mind. I am not able to connect it to a fundamental development there. Do not understand the theme, to be honest with you, but price and relative strength rarely lies. What else should I mention? USDT dominance is growing today, increasing. The money are fleeing. As you can see, everything is red. The money are fleeing to the safety of stablecoins. But apart from that, it's a chop too. No pronounced volatility contractions, no beautiful patterns like this one that could lead to a breakout after that. Nothing to tell about it. It just confirms the regime, and the regime is sideways or chop, just as any other stock out there, or token. I'm sorry. What else? I think I could mention some new themes to which some stocks are probably pointing at this moment. And the first of them is the alternative energy. You don't have to have big brain to understand that this oil crisis, it could be short term or it could be long term, but people will remember it, and nobody likes to be somebody else's hostage. So governments and corporate structures all around the world will drastically increase their investment in renewables. And one of these of companies in this space is Solve Energy. Recent IPO, by the way, that went public during this so-so year for the market overall. And as you can see, this is almost perfect flat consolidation. You can draw a flat line somewhere here maybe. Flat lines are preferable because you don't have much supply above them. Unlike with the inclined lines, for example, maybe something like this is it makes sense to as a trend line to trade against. But as you can see, the volatility here is to be expected because there is a supply above that. But above a flat line, there usually is no immediate supply. So above 33 is the magic number here. This is quite viable. But once again, it should be supported by the market overall, because individual breakouts could work, but they will face some pressure from the volatile market, which is being bombarded. Quite literally, some places are being bombarded, but the markets are being bombarded by political statements these days. So that's an interesting company. I think they are doing the full cycle deployment of solar power plants. That is my understanding, and I think this company is one of the many in this newly revived space of alternative energy. So this is a good example. Another thing is South Korea. South Korea is strong because it has this dual driver. So the first one is technology, obviously components for AI data centers. And on top of that, they are also big exporters of ships. And the disruption of Hormuz Strait logistics will spike the demand for ships drastically. So this is another factor in here. But it also had this run, and it looks still strong here and quite interesting. As I've said, this whole war situation will trigger long-term changes, long-term repositioning of energy markets, the structure of energy markets, international logistics, defense maybe, but that's not the case at the moment. And another interesting name here is the small cap index. And why small cap? As you probably know, I am a bit skeptical about the implications of AI for the economy in general, and I think that the economy with AI will lose workers faster than it will be able to reabsorb them as entrepreneurs, because AI AI disrupts traditional hiring in big companies because it helps drastically increase output with less employees. And so that's bad. That's bad for the economy because spending power is suppressed in the consumer economy. But at the same time, it enables people do small and medium business easier. So that's why the strength in this domain here, higher relative strength in relation to other markets like QQQ and SPY here. So this is basically it. Would I be plunging into this market? No, absolutely not. As I've said, my personal goal is to be able to adapt to the current market regime. And at this moment, this market regime is supportive of actually selling strength than buying it. And we gotta see. We gotta see. The chop will persist exactly till the moment when it will be replaced by trend. Which direction, we don't know yet. There are different fundamental factors, and I could talk about them for an additional hour here. But just talking is not the goal of this presentation. And in the end, let's have a brief look at fundamental catalysts during the previous week here. So it's only PPI month on month on Tuesday, and we will have relatively calm week in terms of macro releases, and it's good because we don't need additional volatility. Inflation during the previous week was okay, nothing problematic, but Michigan consumer sentiment is a bit lower. So no apparent news from the macro side, and obviously the next week will be again will be about the Iran-US confrontation again. So with that being said, I think that everything we have discussed all the relevant information, and most of it was quote-unquote philosophical, but very important to developing your model of behavior and interaction with this market. Bye.